Here are the crypto top headlines covered in this video. What are the next steps for Bitcoin ETF? Next, spot Bitcoin ETF capital. Could funds potentially buy up all BTC in circulation? Also, Bitcoin ETF approval would be a historic mistake, says Better Markets CEO. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: what are the next steps for Bitcoin ETF? Final amendments from asset managers seeking regulatory approval for a spot Bitcoin ETF are due on January 8th. Analysts expect trading to begin on January 11th. The final steps for a spot Bitcoin exchange-traded fund debut on Wall Street are in progress, with final revisions from asset managers expected by the morning of January 8th, according to Bloomberg analyst Eric Balchunas. The revisions should be submitted through S1 filings no later than 8 a.m. Eastern Time or 1300 UTC and should reveal applicants' remaining fees and tickers. BlackRock, for example, has not yet disclosed the fees associated with its ETF. Exchanges set to trade the crypto funds submitted their 19B forms after markets closed on January 5th. Together, 19B and S1 forms are the last steps before a verdict from the United States Securities and Exchange Commission, the analyst explained to Cointelegraph. The next stage in the decision-making process could be the vote by the SEC commissioners. On the commission's public agenda, however, nothing is scheduled before January 11th, when markets forecast the ETF's debut. According to Balchunas, the SEC could make the decision using its delegated authority policy. We're not even sure they are going to vote. They could use something called delegated authority, but we don't know. It looks like there are three options: whether they vote or use delegated authority, which means they must approve it because when they denied the past ones, they didn't have a vote. Balchunas predicts that most applicants will be approved next week, or at least those who meet the regulators' requirements before December 29th. The analyst also noted that Grayscale, which is seeking conversion of its over-the-counter Grayscale Bitcoin Trust into a listed BTC ETF, may receive its decision after the first applicant's approval is granted. It wouldn't surprise me if there was something different with them. Commenting on Better Markets' letter on January 5th, which stated that approval of ETFs would be a historic mistake, Balchunas said it was the last gasp of an angry crypto hater. What they miss, and if they did address this, I'd give them more respect, is the current ways that a person can buy crypto. Everybody can buy crypto now. It's not like the ETF is making crypto available for the first time. I don't think it really carries much weight. I think they just want to sort of be on the record that they hate it. For the past 10 years, the SEC has denied approval of a spot BTC ETF, citing concerns over potential market manipulation. However, the regulator appears to be backed into a corner, according to Bloomberg's James Seifert. Our next top headline: spot Bitcoin ETF capital. Could funds potentially buy up all the BTC in circulation? A company or a government might attempt to buy a significant amount of Bitcoin, but it would likely get tricky pretty fast, as the price will only continue to rise, analysts say. The long-awaited potential approval of a spot Bitcoin exchange-traded fund in the United States could mean the market sees Bitcoin supply suddenly drop as funds snap up as much as they can, some market observers have predicted. With prominent firms like Ernst & Young expecting U.S. Securities and Exchange Commission approval to trigger massive demand from institutions, will the financial giants behind these ETFs leave any actual Bitcoin on the market for the rest of us? A U.S.-based spot Bitcoin ETF could bring up to $30 billion of fresh cash into Bitcoin, crypto entrepreneur and investor Lark Davis estimated in September 2023. In such a scenario, spot Bitcoin ETF issuers would buy up about 50% of all Bitcoin on crypto exchanges to back their ETFs, he projected. But buying as much Bitcoin as possible would likely get tricky for anyone, several industry executives and analysts agree. Theoretically, a company or government could attempt to buy a significant amount of Bitcoin, but acquiring all Bitcoin in circulation is highly impractical, and we still have a significant unreleased supply of Bitcoin, Valkyrie CEO Lee Wald told Cointelegraph. Wald noted that Bitcoin's supply is capped at 21 million coins, from which 1.4 million BTC are yet to be mined, she added. Bitcoin's decentralized nature and the fact that many holders might refuse to sell at any price create a natural barrier against monopoly. Matt Hogan, Chief Investment Officer at Bitwise, another spot BTC ETF applicant alongside Valkyrie, also believes that no one could theoretically establish a monopoly on Bitcoin. The scarcity principle, a well-established economic principle, tells us that the price of a scarce good will rise to meet demand, Hogan said. In other words, if someone tried to corner Bitcoin, the price would rise and rise and rise, and more reluctant sellers were met, the exec added. However, Hogan conceded that someone could still corner a significant amount of Bitcoin. Jan3 CEO Samson Moe echoed Hogan's stance, expressing confidence that it would be difficult to buy all Bitcoin in circulation due to extremely high prices fueled by products like a spot Bitcoin ETF. The price people are willing to sell increases when there are fewer coins available for sale, he stated. According to Moe, BTC holders will have to think hard about whether they should sell their Bitcoin given the depreciation risks of fiat currencies like the US dollar or the euro. He said, so as funds buy more BTC and increase their assets under management, it will become harder and harder to find willing sellers. Despite high competition among potential spot Bitcoin ETFs, these funds are unlikely to try to buy all the Bitcoin in circulation, according to David Gerard, author of the book and crypto blog Attack of the 50-Foot Blockchain. ETFs are part of using Bitcoin as a dollar derivative. The issuer doesn't care about the cryptocurrencies at all. They care about the dollars they can get from them, Gerard told Cointelegraph. He added, lots of holders have way more Bitcoin than there are actual dollars trying to buy. The markets are thin. Although many industry watchers expect spot Bitcoin ETFs to fuel massive demand and thus positively affect the BTC price, some execs, like BitMEX co-founder Arthur Hayes, believe that successful ETFs could completely destroy Bitcoin. According to ARK Invest CEO Cathie Wood, some investors might sell on the news of spot Bitcoin ETF approval in the short term. Meanwhile, some believe that the potential approval of a spot Bitcoin ETF in the U.S. could have little to no impact on markets, as multiple spot Bitcoin ETFs have been trading for years in other parts of the world, such as Canada. However, the size of the U.S. capital markets is so large that this comparison may be irrelevant, according to Bloomberg ETF analyst Eric Balchanas. The crypto market has never seen an injection of capital of this potential magnitude, as Balchanas and other analysts predict. Eric Balchanas tweeted, agree on the underestimating of advisors' love/trust of ETFs as well as the sheer size of advisor assets under management. Here's a chart we use in some of our notes to try and explain this. The hard-to-get data is via Cerulli. $30 trillion is financial advisor, $12 trillion is retail direct, $8 trillion is private bank. Our next top headline, Bitcoin ETF approval would be a historic mistake, says Better Markets CEO. Bloomberg ETF analyst James Seifert disagreed with the letter, arguing that denying the spot Bitcoin ETF would be a criminal move. Dennis Kelleher, CEO of the nonprofit organization Better Markets, has urged the United States Securities and Exchange Commission not to approve a spot Bitcoin exchange-traded fund, arguing that it goes against the core principles of the regulatory body. In a letter addressed to the SEC, Secretary Vanessa Countryman on January 5th, Kelleher emphasized that if the SEC were to approve a spot Bitcoin ETF, it could lead to investors facing significant risks. We submit the supplemental comment letter, which Better Markets very rarely does, because it would be a grave, if not historic, mistake, almost certainly leading to a massive investor harm if the SEC approves the pending rule change. Kelleher argued that the proposed product would expose investors to the risk of potential fraud, a concern he claims is commonly associated with the crypto industry. The approval of these spot Bitcoin ETPs would not only expose investors to a market thoroughly contaminated with fraud and manipulation, he stated. Cointelegraph recently reported that over 324,000 crypto users fell victim to phishing scams in 2023, with around $295 million in digital assets lost to wallet drainers. Meanwhile, Kelleher further explained that it would also enable the crypto industry to claim that its products are now approved by the U.S. government. However, prominent crypto commentators dismissed the letter, with Bloomberg ETF analyst James Seifert criticizing it on social media. In a post on X, Seifert reiterated the substantial effort invested by asset management firms in advancing their applications. James Seifert tweeted, "Would be an absolutely criminal move for this to happen, considering the time, effort, and energy from all these issuers and from the SEC staff over the last few months." Meanwhile, in another X post, Fox Business journalist Eleanor Tourette reiterated negative remarks that Kelleher has made about crypto in recent times. "It's worse than a fantasy, it's a fraud on the public," she recalled. Kelleher made the comment during an interview with the Institute for New Economic Thinking in May 2023. In more recent news, 11 spot Bitcoin ETF applicants submitted 19B-4 amendment forms before the close of business on January 5th. These forms are one of the last stages in the SEC approval process, but S1 documents must be completed in order for the U.S. exchanges to begin listing shares of investment securities with direct exposure to crypto. Some experts have speculated that final approval for the spot Bitcoin ETFs will drop before January 10th, the deadline for an offering from ARK Invest and 21 shares. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.